Hey everyone, welcome back to the second part to our chapter 1 example. And in this video, we are going to be taking what we did in the first part, which is the chart of analysis, and converting it into our financial statements. And so we know our financial statements are the four that we're going to be dealing with is the income statement, the statement of retained earnings, the balance sheet, and the statement of cash flow. So let's get into it. Here is my template for my income statement. You can write this out or print one out if you'd like. First, I'm going to start by adding the name of my company to the top. So this is Alpha Company. This is the income statement, and this is for the year ending December 31st of 20 something. I'm just going to put XX there as a placeholder. But keep in mind, income statements are showing what we've done throughout the past year. So that's why it says for the year ending December 31st. It's not as of December 31st, what is the balance as of that day? It's just saying this is what we've done over the course of the year that ends in December 31st. We also know on the income statement it's really comprised of two parts, revenues and expenses. So let's go into the revenues first. We know that we have revenue in this problem, obviously. We've got it written down. We should know that we have two types of revenues. We have our consulting revenue, which is our main type of revenue, and then we also have rent revenue. If you remember in transaction 8, not only did we do consulting work for a client, we also rented them our facility. So we've got two types of revenue. So let's start with our main one, which is consulting revenue. In consulting revenue, we have consulting revenue in transaction 5, which was 1240, and we also have consulting revenue in transaction 8 for 1200. So if we add those together, those are going to give me a total consulting revenue of 2440. And then we also have that other revenue that was in transaction 8 where we rented out our facility. So we're going to call this one rent revenue. And that was for $200. So I'm going to add $200 there. So if I add up both of these types of revenues, that's going to give me a total revenue of 2640. Now notice I put the total revenues out to the right a little bit to show that this is a sum of the subcalculations from above. Now let's go into our expenses. We had a couple types of expenses. They're the ones that have EXP next to it. That's why we did that. So transaction 6, we had rent revenue, or excuse me, we had rent expense for $400. So I'm going to put rent expense, and I'm going to put $400. And then we also had in transaction 7, we paid our employees $600 for their salaries. So I'm going to put salaries expense for $600. Notice both of these numbers are positive on my income statement, whereas we had them negative on the chart. That's because we're looking at it specifically from expenses, not from retained earnings. The expenses went up, but the retained earnings went down. That's why they were negative on the chart. If we add these two expenses up, that's going to give us a total expense of $1,000, which again, we pushed it out to the side for the total expenses. And we also know that from the income equation, revenues minus expenses gives us net income. So 2640 minus 1,000 gives us 1640. And it's going to be double line because that is the last figure on this financial statement. We're done with calculations. We're not going to do anything else with that. This is our bottom line figure. All right, that is the income statement. The next one is the statement of retained earnings. In the statement of retained earnings, again, our name is at the top. It's still for the year ending December 31st because, again, this is showing what we've done over the course of the year. We are going to start the statement of retained earnings with our beginning retained earnings, or what our retained earnings balance was as of January 1st. We're a brand new business. We don't have anything. We started this year. There's no indication that we were a business prior to this year. So when you're a brand new business, all of your balances start at zero. No matter what you've invested in it, everything starts at zero. So for us in this one, our beginning retained earnings is going to be zero. To that, we're going to add the net income we just found, which is the 1640. And if we add that together, that's going to give us 1640. From that, we're going to subtract out dividends if we had any. Now, we do have some in transaction 11. We had $200 paid dividends. So we're going to take away the $200, and that will give me a ending retained earnings of 1440. And so again, that's my last number, double lined. You don't have to worry about moving the sums or the totals out to the right in these because this is just a very standard one column form. So you don't have to worry about indenting the sums. So that's just how this one works. All right, that is the statement of retained earnings. Now we're going to go to the balance sheet. Again, our name is at the top. This time it doesn't say for the year ending, it says December 31st of 20 whatever. And that's because a balance sheet, again, tells us exactly what the balance is as of that date. not what we've done over the course or how it's changed over the course of the year, but this is just really what is our balance as of right now. And so these are split up into assets, liabilities, and equity. So we're going to start with assets first. We do have a few of them. So the first one we're going to deal with is cash. Always start with cash. Our cash balance as of that date is going to be $5,440. Again, we get that from the bottom of the column. We have accounts receivables. We had accounts receivables, but they were paid off. So you could, if you wanted to, add accounts receivables here and have a balance of 0, but there's really no point in it. So we're going to skip accounts receivables and go to the next one that we have a balance in, which is supplies. And our supplies balance is $2,400. And then we have equipment. And equipment, our balance is $2,000. So if we add up all the assets, that's going to give us a total asset of $9,840. Now we're going to double line this one. Notice, because we're done with the calculations for this number. We're not going to add anything to that number. We're not going to do anything else to that number. The only thing we're going to do to that number is compare it. So we're going to go ahead and put a double line under that. All right, now we go to liabilities. We have liabilities. We have accounts payable. So I'm going to put accounts payables there. Our balance is $400. So, and that's all we have. So I can say that's the sum of my total liabilities is also $400. And then we have equity. And equity has the two parts, the common stock and retained earnings. So common stock, my balance is $8,000, and retained earnings, my balance is $1,440. Now you can get that in two places. You can get it in the chart that we just did, or from the statement of retained earnings that we just completed. Add that up, that's going to give me a total equity of $9,440. And if I add my liability and my equity up, that's going to give me a total liability and equity of $9,840, which again matches the assets, so we know that our accounting equation is equal. That's a positive. All right, now the last one we're going to have to do is the statement of cash flow. Now, statement of cash flow is a little bit trickier. Again, we're going to start off with our name. This is, again, showing what we've done for the past year. So that's why it says for the year ending December 31st. This one's broken down in our three areas: operating activity, investing activity, and financing activity. First, we're going to look at only the operating activities, or only the transactions that we have OA next to. And more specifically, just to start off with the OAs, we're only going to look at the OAs that are positive, because we always want to start with a positive number. I kind of look at it as starting with your best foot forward. You want to start with positive numbers. The first place you always want to start with is the cash that comes from your customers, because that's your normal business. So I'm going to start with cash received from customers, and now I have to do some adding. I had in transaction 5, $1,240, that came from customers. Transaction 8, $200, that came from customers. And in transaction 9, $1,200, that came from customers. So if I add all those up, that means all the cash that I got from my customers was $2,640. Now I don't have any more positive numbers coming in from OA, so now I look at the negative numbers, the cash payments going out. So the first one I have is cash payments for supplies. And I had two cash payments for supplies. I had it in transaction 2, I paid $1,000. And in transaction 4, I bought $1,400, but I didn't pay for that in cash. Later on in transaction 10, I actually paid some of that off in cash. So my cash payments for supplies is actually only $2,000, not $2,400, because I haven't paid cash in $2,400 yet for supplies. I still owe that $400. So my cash payments for supplies is negative $2,000. Notice I am putting parentheses here. All right, the next one that we have is an OA that's going out is cash payments for rent, which is transaction 6. And so that was negative $400. It was paid for in cash. And then finally, the last OA that has cash going out is cash payments for salaries. And that was for $600. So I'm going to put negative $600 there. And if I total this up, this is going to give me a net cash flow from operating activities of negative $360. Now, what does that mean? Net cash flow from operating activities tells me my cash went down, because it's a negative number. My cash went down by $360 simply from operating activities, simply from my day-to-day business activities, which is not the best. We're just going to chalk that up to this is a brand new business and it hasn't really got steam yet. But we really want that at its minimum to be positive. But again, we're in the first year, so we'll overlook that. All right, so now let's go into investing activities. We had one IA. It was not cash coming in, so we can't start with a positive number here because we don't have any. We only have one, and it was cash going out, so we're going to call that cash payment for equipment, and that was for negative 2,000. So if that's our only one, then that's going to be our net cash flow from investing activity. So based on this, we've lost $2,360 worth of cash just this year alone. That's not the best, but hopefully we've got something to make it up in financing activities. So let's go to financing activities. So in financing activities, we actually have two transactions that have FA. We want to start with the one that has the positive number. So we'll start with transaction one. And that's where we got cash from investors in exchange for common stock. So I'm going to put cash received from common stock for $8,000. That takes care of that one. Now let's go to where we paid it out, and that was in transaction 11, which is the dividends. So cash payments for dividends, that was negative 200. So if we add that up, that's going to give me net cash flow from financing activities of 7,800. So there's a positive number. Now, the next line item is the net increase in cash. So if I add up the net cash flow from operating activities, from investing activities, and from financing activities together, that's going to give me a net increase in cash of 5,440. So my cash, based on all of the activities, went up by 5,440 just this year alone. Now, if I add to that my beginning cash balance from the beginning of the year, which again, we're a brand new business, so it's going to be zero. That's going to give me my ending cash balance, which is 5,440. Again, that's a double line figure because it is the bottom. We're done with that. No more calculations. But if you take a look back at your balance sheet, the ending cash balance here on the statement of cash flow should equal the cash balance on your balance sheet. And in this situation, it does. It's still 5,440. And there you have it. That is the financial statements. I hope that made sense. I'll take care.